Late last month, the annual ULI and PwC Emerging Trends in Real Estate report for the US and Canada was released, and this is one of the most highly anticipated market reports among industry professionals every single year. This report includes information on the state of the commercial real estate market as a whole, a performance outlook for each of the major product types, and even a section that's my own personal favorite on geographic markets to watch, which highlights 80 US metros and ranks these cities based on expectations going forward for real estate prospects. These rankings are compiled based on survey responses from leaders of some of the largest real estate firms in the world, including representatives from companies like Blackstone, Brookfield, AEW, Eastdil, JLL, Prologis, and many other top firms in the industry, and with the opinions of so many smart people that also control a significant amount of capital flows are put together all in one place. This is information that I pay close attention to. So to save you the time of reading through the entire 127-page document, in this video, let's walk through the top 5 real estate metros for 2023 according to the ULI and PwC report, and how these rankings might be able to help identify the next breakout market in 2024. So to start out at number 5 on this list, this market kept its exact same ranking from the 2022 report, and this is Tampa, St. Petersburg, Florida. Tampa, St. Petersburg was heavily favored in several different categories in the survey, ranking 3rd in projected home building prospects and in the top 10 of the 80 markets tracked for buy recommendations for retail, office, and hotel properties. This market also came in the top 5 among all metros tracked in local economic health, investor demand, development and redevelopment opportunities, local public and private investment, and the availability of debt and equity capital. For businesses, families, and individuals looking to move to the state of Florida, Tampa has become a much more affordable option than Miami, and with major employers in the metro including Raymond James, Bloomin' Brands, and public supermarkets, no state income tax, non-existent winters, and easy access to beaches, Tampa St. Petersburg has become an extremely popular market over the last few years. Now, metro number 4 on this list also didn't move from its spot in the 2022 rankings, and this is Austin, Texas. Austin ranked 1st among all metros tracked in local economic outlook, investor demand, and availability of debt and equity capital, and similar to Tampa, also ranked in the top 10 for retail, office, and hotel buy recommendations. Austin is projected to see a 2.1% annual increase in population over the next 5 years, which was the highest number of any of the 80 metros tracked in the report, and Austin also had one of the highest concentrations of office using employment in the nation, trailing only New York City, San Francisco, and San Jose in this metric. Over the past 10 years, this market has become one of the most prominent employment hubs in the entire country, and in 2022 alone, companies that expanded their footprint in the area included Apple, Snapchat, TikTok, and Facebook, creating thousands of new jobs in Austin this year. And when you combine this with mild winters, no state income tax, and housing costs that are significantly less than most other markets with these types of job opportunities, and this has led to significant population growth and overall demand for real estate that's very likely to continue throughout the near future. Now, unlike Austin and Tampa, market number 3 in the 2023 report saw a huge jump from their number 8 spot in last year's ranking, and this is Atlanta, Georgia. Atlanta is expected to see 1.2% annual population growth over the next 5 years, which was significantly higher than the 0.5% national average, and Atlanta also ranked 9th for home building prospects and among the top 15 markets tracked for development and redevelopment opportunities, investor demand, local economic health, and availability of debt and equity capital. According to data from the Bureau of Labor Statistics, between 2021 and 2022, Metro Metro Atlanta saw the second highest job growth in the entire nation among major metros in the country, clocking in at over 6.7% year-over-year growth, and the cost of doing business in Atlanta was also less than the national average, which was only the case for one other market in the top 5 of this list. With almost 6.3 million people, Atlanta is one of the largest cities in the entire country, with major employers including Delta Airlines, Home Depot, UPS, and Coca-Cola already headquartered in the market, and with Atlanta also now being recognized as the Hollywood of the South, job growth will likely continue to increase in the metro over the near term. Now, the market that came in at number 2 on this list also saw a big jump from their spot in the 2022 report, coming up from number 7 in last year's list, and this is Dallas-Fort Worth, Texas. The DFW market ranked 4th among all markets in availability of debt and equity capital, 3rd in investor demand, 2nd in local economic health and local public and private investment, and 1st in development and redevelopment opportunities in the market overall. DFW is projected to see 1.4% average annual population growth over the next 5 years, which was one of the highest of any markets tracked in the report, and this metro has also quickly emerged as a significantly more affordable option to neighboring Austin, with the median home price in Dallas coming in at just $328,000 in September, while the median home price in Austin clocked in at over $630,000 during this same time period. Similar to Atlanta, DFW is also a major established employment market, with companies like AT&T, ExxonMobil, CBRE, Southwest Airlines, and Texas Instruments all having their headquarters in the DFW Metroplex, and similar to the other Texas and Florida markets on this list, Dallas has attracted both businesses and individuals with mild winters, no state income tax, and affordable housing options compared to other major markets. And finally, the number 1 market on this list is the first repeat winner in the report, since San Francisco topped the list in both 2013 and 2014, and this is Nashville, Tennessee. Investors in the survey were extremely bullish on this metro across almost all major asset classes, with Nashville coming in at number 4 in industrial buy recommendations, number 3 in multifamily buy recommendations, number 2 in retail buy recommendations, and the number 1 market for hotel investors in the report. Nashville also ranked 3rd among all markets tracked for local economic prospects, 2nd for availability of debt and equity capital, investor demand, and development and redevelopment opportunities, and 1st in the report for local public and private investment. 5-year projections for annual population growth in Nashville were almost 3 times the national average at 1.4%, and 5-year projected annual employment growth of 1% in the market represented 2.5 times the national average figure. And with the cost of doing business coming in at less than any major metro among the top 5 markets on this list, companies like Amazon, iHeartMedia, Oric, and Asurion all having a major office presence in the market already, and a tax and business-friendly environment in the state of Tennessee overall, these are all positive indicators of continued job growth and population growth within the market long term. Now, even though these rankings can give you some really helpful insight into the thoughts of the leaders of some of the largest investment firms in the world, what's often even more valuable than the actual rankings themselves are the patterns that show up in this data that might be able to help identify the next breakout markets with similar characteristics. And the 3 biggest patterns that stand out to me in this report are population shifts in the US moving towards lower taxes, warmer weather, and in-office employment that makes housing more affordable. 4 out of the 5 markets on this list are located in states with no state income tax, which is attractive for both businesses and individuals looking to keep more of what they make. The average year-round high temperature in these markets is also 76 degrees, which is a full 19 degrees warmer than the bottom 5 markets for overall real estate prospects. Each of these metros also had office-using employment figures that were between 20% and 40% higher than the national average, but these markets still have housing costs that are significantly lower than traditional gateway markets with comparable office-using employment, including Los Angeles New York, San Francisco, Boston, and Washington, D.C. Really simply put, businesses and their employees are moving to markets with warmer weather, lower taxes, and more affordable housing. And if you're looking for the next real estate market that might break out, it's very likely going to have these three characteristics. So if you're trying to come up with an investment strategy or market focus for the new year, I hope this breakdown was helpful. And if you want to learn more about the investment analysis process or how to build a real estate financial model from scratch in Excel, as always, make sure to check out our all-in-one membership training platform, Breaking a CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Break into CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on different real estate markets, make sure to hit the like button to let me know, and let me know in the comments the markets you like most for 2023 and why you're bullish on those cities. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.